It's time now for a spot of business news on France 24, and as usual, we begin with the markets. This was how the three main indices closed at the end of trading on Wall Street on Thursday. Losses in US stocks accelerated after the government here in France imposed that month-long lockdown on the capital and several other regions due to the coronavirus sanitary crisis. The Dow Jones Industrial Average fell 0.46%. The S&P 500 lost 1.48%, while the Nasdaq fell just over 3%. And this is how the land lies over in Asia at the moment. A rather grim picture there, as you can see. The Nikkei in Tokyo trading down 1.20%, and the Hang Seng in Hong Kong also faring badly. Well, for more, we can bring in Jamil Ahmad, one of our regular market analysts, and he joins us now from London. Jamil, thanks for being with us once again. How can we explain what's happening on the global markets at the current time?
Thank you as well. And the $1 million question for financial markets this week was really how the Fed, which is the US central bank, would react to rising treasury yields over the past couple of weeks and rising inflation expectations in the United States. And their repeated assurance and the narrative that no matter what, they're going to let interest rates remain low for as long as the economy takes to recover from the pandemic. This has contributed to the sell-off, but as you already put it out in your intro, the increased lockdown restrictions in Europe have also impacted global markets. We've also had the worst sell-off in the oil price in roughly 10 months, which was an 8% decline. So overall, their risk assets, including global stocks and oil, have taken a hit towards the end of the week. We shouldn't also forget, though, that low interest rates in the United States have contributed to a very strong stock market valuations over the past couple of years, and it's difficult to see that trend concluded. But overall, because of these increased concerns over infection outbreaks and also inflation expectations, we're seeing the dollar strengthen, and that risk-off environment is likely to continue into the end of this trading week at least.
And Jamil, we've also seen the UK's central bank announce that its Monetary Policy Committee has voted unanimously to keep its key rate at 0.1%. Tell us more about what this Bank of England interest rate decision actually means.
This one slipped underneath the radar and it was actually considered as something as a non-event because a lot of the focus was on the global market turmoil and then the interest rate decision in the United States. But essentially, the Bank of England did leave policy unchanged, and they were a little bit more of a cautious tone than what one would have expected because 3 times as many people in the United Kingdom have been vaccinated against what's the comparison is in the European Union at this time. And it's very much hoped that the UK economy will be ready for a full reopening at the end of June following lockdowns that have been in place with the third national lockdown since December. But the Bank of England really took a cautious tone that this has been the worst economic drop-off in the UK economy for 3 centuries. It's going to take a long time to get things back to normal, but one does hope that as the economy does step forward and towards reopening, that the Bank of England can be a bit more upbeat in its narrative, because that came as a bit of a surprise this month.
Okay, Jamil Ahmad in London, thank you very much.